get this on and get through this disclosure real fast. So I'm waiting for this earnings report to hit. I'm on YouTube. Oh, there we go. Just want to get this on and get through the disclosure real quick. So I'm waiting for this earnings report to hit. I'm on YouTube. I'm on the VTF. Let me know if the YouTube sounds good because I'm traveling again today. So all different things all the time. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer. Member of FINRA Second. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. And the position disclosure is unchanged. Unchanged. Anyway, I'm waiting on this S report here. Holding some into the report, so I gotta manage this position for a minute. If you guys can give me a little time, but I'd rather just be on the air than keeping everything delayed. There's an uptick. Oh, I'm inside. Oh my gosh, fill me. There we go. There we go. Bada bing, bada boom. Loss per share 8 cents. Estimate loss per share 14 cents. Seminole one. Second quarter revenue beats. The measured move was like to 18. I wrote it down, 1820 or something. So I had I had a pretty big offer right in front of 18. Actually, two of them, and both of them got filled. Let's check something on my spreadsheet on my other screen. S. I'm supposed to get up to $17, I think, right? Now it's up to 18. All right, I gotta be doing some rebuying now. Yeah, I needed to take that offer at 03. There was 3 to 4,000 shares in. I was too slow. Too slow. Up to 17. Right, up to 17. Gosh, man, if I needed to take that offer. Oh well. Too slow. How come I feel like I'm always trading earnings reports when I'm on the road? On the road, on the laptop, much slower on this keyboard. Sorry. Sorry, I love you guys. I love doing the meetings, but I love making money even more. I bought a little on that pullback, but not as much as it probably should have been. But, it's like I say, there's no shouldas in trading, right? That 3,600 share offer that came in down there at 1703. Annual recurring revenue, nice beat. See Q3 revenue, 156 million. A nice report. Whoops. I've only ever had a target on this thing at 19 bucks. I'm gonna hit out and reassess because that's been my target. I'm at an S. I don't really want to be out because of the buyout rumors, but I've just been having this. No, it's gonna be 98 degrees this weekend here, Brant, during the day. I don't know what the deal is with that. 98 degrees, Minnesota. Sorry, let me just get a few bids out here in case this thing pulls back, and then I'll start a meeting, like the actual meeting. Well, that kind of just made my day. Otherwise, it's a pretty boring day. All right, so we get a couple more bids out here. Down near 17, just in case. Very volatile after hours trading. Remember we used to have that trade the news service at the old offices back in the day, and he sometimes would be like, very volatile afternoon trading or after hours trading on the earnings report. I'd be like, yeah, buddy, of course it is. Yeah, I've been long ass. I've been long ass all year for the most part. I had gotten out in front of that last earnings report though, which luckily that was sure. I mean, the thing is just pretty well beyond my target. So I think my target then was like 19. I might have held a little further than that on a piece, and then I was all out because this move was so big into the report. And then I built back in after hours on that, and I started a little bit too early. I think I started like 15 or so after hours that day, and it put in a post earnings report low of $12.43, which was just ruthless. But I've traded it, the last 3 months since that earnings report throughout that area, and it's treated me pretty well. But like I said, I've had a target of $19 on it. Um, it did it did it opened all the way down at like 13 and change that day on me. Was down a good bit of P&L on that one. But stuck with the trade per my game plan. Because like I said, I've been trading it all year. Shout out to Penny for putting it on my radar really to begin with. I think I owe Penny a dinner at some point. Let me know when you're coming to New York, Penny. Let me know. You and you and the hubby. Are you guys at dinner? Anyway, keep an eye on this out of the corner of my eye, and let's talk about the market. I have to shut down by 5 p.m. Eastern today. Um, yeah, I'm just traveling these couple of days. I'm in Minnesota for the long weekend here. Seeing Pearl Jam tonight. Pumped for that. And I've got an early dinner to attend, so I gotta shut down by 5 p.m. Eastern out here. Anyway, you can see the 5 minute chart of the spies. There's nothing to talk about on the 5 minute chart of the spies as far as the intraday action goes. See the Prince Museum? I'll make note of that. Apparently the fair is this weekend. I just learned that earlier today at lunch. The Minnesota Fair, or I don't know, Minneapolis Fair. Apparently it's a very big deal. So we'll see. Um, yeah, I hear this one and the Iowa one are pretty important. America, Prince Museum. I'm writing this down. Anyway, so the market today was really boring, which kind of met our expectations. I mean, it's August 31st here. It's the last day of August, so summer's wrapping up. This week, next week tend to be a couple of the slowest weeks of the year. Though we did get some decent action this week overall. Today was a day five gap up. So what we kind of discussed in the morning meeting, going over to the daily chart, was that if you want to be really aggressive on the short side, you could be looking to fade the gap up this morning or short bounces. But all our metrics of extension showed that while the market is extended coming into today's trading session, we're not really at that extreme extension quite yet that we feel really comfortable coming in on the other side of the market for. So it's been a great bounce overall from our real conviction long point on August 18th. I mean, we could not have called that better. And these last 5 days, pretty much, this trading week has just been up and up and up. It started with a negation of this negative Maribozu that came in post the NVIDIA earnings report on August 24th with this little downside tail through that previous day's low. And we talked about how that's one of the ways in which a negative Maribozu can actually get negated in the market. That was fantastic. It helped us work the market up here. Um, and then, yeah, just kind of holding on for the ride as we continued and continued. Day five gap up, not something that you want to buy, not something that you want to buy, right? That's the big thing that we talked about in the morning meeting today was even if you don't want to be super aggressive on the um, shorts, please recognize that unless you're focused on creating an earnings name or something that's going to feel independent to the market, that you do not want to be buying any new stock. And if you want to be aggressive in the shorts, you can start in the beginning of the day today. But really, we want to get a little bit closer to that $10 worth of extension. We want that short-term tactical to be in the red zone, and it just wasn't quite in that red zone yet. The upper Bollinger Band and the S&P that Pat was talking about in his morning note, we weren't quite there yet. Um, so a lot of measures would basically show that coming into today's trading session with the gap up, we are extended and you could go for it, especially because we started below equilibrium and today we're well above it, but not quite there yet. So I was trying to be really patient on the short side. At one point today, in the morning, I had an offer out in the T triple Q to begin to short, and that offer was at 42.99. The high of the day is 42.98. And it was really only as we were getting there that we were really hitting like $9 of extension from the ADMA and the Qs, which again, just to remind anyone or anyone who's new, it's been a very consistent signal over the course of the last year and a half that whenever we become the price action is $10 plus away from the ADMA on the daily chart for the S&P and Qs. It's just been a fantastic signal to really piece out of your longs, or if it's to the downside of your shorts, and to potentially build in a little bit in the other way for at least a shorter term pullback. So, T triple Q or the Qs at highs, we're just about getting there. And what I was saying to you guys was I'm about ready to start my short, but I'm gonna be starting my short very small initially, and I'll look to building. And then at a certain point when I didn't get filled at that time, I canceled the offers and I was like, you know what? At this point, we're still just not quite extreme enough. It's turning into a little bit more of a rest day, which by the way, a rest day is technically bullish. um, I would rather just at this point wait for tomorrow. We've got the jobs number tomorrow. The market's probably going to move on it. I mean, it is the Friday before a holiday weekend, so there's a good chance that tomorrow might be a little more liquid and slow as well. But the jobs number could put this market in play. And if we can get a really big gap up on that number, if we move higher, pre-market tomorrow, that will probably really give us more of that extreme extension that we're looking for, if that happens. And if it doesn't go that way, if the market trades down or trades sideways or whatever, and I never get short or I miss the short, the thing about trading counter trend that I've constantly been harping on is that you are better off missing it entirely than being too early. And I'm a big believer in that. So it's like if I didn't get my T triple Q short today by 1 penny, and that means I never get it at all, I'll be just fine with that because by being patient, it means sometimes you end up kind of missing that opportunity. But in the long run, counter trend patience is really your friend, and our very own Patrick Haw here has really shown us the mastery of patience on those counter trend trades in a lot of ways. Which, by the way, Pat, that short in Amazon today, I mean, talk about patience and waiting and waiting and waiting. I mean, Pat called the short out, I guess this bar at 10:10 was closing. I mean, that's just phenomenal execution. Just and I don't want to speak for you, Pat. I didn't follow your profit taking on the short. I doubt you held entirely to this move. Most likely you're just looking for a quick pullback to 5 minute equilibrium, 80 EMA, 21 EMA, if you're being a little bit more greedy, something like that. And that's what we're looking for on our counter chain trades for the most part, right? We want to be less greedy on our counter chain trades because counter chain trades tend to fail. And that's really good trading. So, again, big picture here with the market, not really too much to update. It turned into a little bit more of a rest day than anything else. Within the confines of that rest day, let's take a quick look. The S&P, as of right now, after hours, is pretty much flat, down 0.07%. The Qs are up 0.35%, and the IWM is down very small as well. So we did get some relative strength from tech. I mean, we were able to see that really early on with the way that, like, again, Amazon was the most glaring example of just big cap relative strength and continuation. So that's pretty much it. For my own trading, I more or less followed my game plan. I was not very aggressive. I just wanted to listen to the glean from today's trading session to hopefully help some of you guys out there is just the importance of kind of recognizing your brain state and knowing where your head's at when you're trading. I flew to Minneapolis last night. I got in a little bit late, and then I went out for dinner and had a drink, and then I was kind of restless and struggled to fall asleep. So I was like very mentally off this morning. I mean, even when I was doing the morning meeting, I think I was getting all the ideas correct and the concepts correct. And I couldn't see numbers. Like, I was like looking at SPY and like calling it like $342. And then like $452 in the meeting. It just was you know, a little bit with that. And then of course, my brain is not on point and the market opens and I instantly make a couple errors. I made a mistake in Palantir where I accidentally bought way too much at a spot that I didn't want to buy. And I mismanaged an opening trade that I tried to take in this Mara when I was looking for kind of a 1, 2, 3 play on the daily. My stock was very atrocious where I got myself stopped out. It just wasn't the right amount of room. I either needed to keep it tighter than I kept it or a little bit looser than I kept it. And I basically hit out right into this 21 EMA on this pullback. I was basically the low of this initial pullback at 1337, and then I was like, wow, you just made like three mistakes in a row. I made two tier sizing mistakes, which I mean those are Trader 101 mistakes in Palantir, and then I totally mismanaged this Mara position. I just like and you guys probably heard my frustration in the radio this morning, and I was like, wow, I need to take a step back. I need to take a step back. I need to take a deep breath. I need to refocus myself, and then selectively put some trades on, or just not trade at all at this point because my head's really not properly in it. And I was able to refocus myself, and I knew that my game plan for today was a less is more approach anyway. I didn't like new longs here generally in the market unless it was something that was particularly in play and could have a lower correlation in the market. I wasn't ready to short. So for the most part, my game plan today was to do nothing except maybe look at a couple of these earnings names. Messed up the Mara trade, made a mistake in Palantir, which Palantir had gotten downgraded this morning. And then, once I kind of calmed myself and seeing myself, I was able to come in and trade this Chewy really well. It's a good trade. And it was like the kind of like 5 minute extension RDR trade that I've been talking about sometimes in these meetings recently, where so Chewy was on earnings. The earnings report certainly wasn't good. I didn't think it was atrocious though for the stock to be down as much as it even is here at the end of the day, down over 12.25%. But who am I? The market certainly knows more than I do. But just as an extension trade off that earnings report, third bar down, buy it on the way up, don't buy it on the way down, call out the 5 minute RDR, back through 23-26 versus lows for the snapback to the EDMA. Did not do it massively aggressively. I did not do it with a ton of size. Basically just, bought myself a Pearl Jam ticket for the show tonight. So not a tremendous amount of size, not a tremendous amount of P&L, but executed it really well. Followed my game plan, caught the move to the ADMA on the 5 minute chart, liquidated my position, moved on with my day, and that was pretty much it. So again, I guess the lesson there is always really important. Know your mindset when you're trading. Sometimes you're traveling, sometimes you don't get a good night's sleep, sometimes I don't know, you're fighting with a friend or whatever, and your mindset just isn't right, or you didn't do your research properly or whatever. You just gotta recognize when you're like that. We're just human. It happens to everybody from time to time. And the worst thing that you can do, and believe me, I've done it, is be hungover and just make stupid silly mistakes or clone your account or let yourself lose way more than you should on those types of days. So I guess that's gonna be the biggest lesson to draw from today's price action, which otherwise was really boring here for the end of August, and that's it. It's pretty much all I got for you guys. I just got back into really small chewy here. Oh wait, I'm not supposed to say that when I'm on YouTube. Ignore that statement. Ignore that statement. So that's all I got, guys. I'm happy to answer any questions that anybody has or review any trades or anything that anybody wants me to look at. So, scrolling up here in the VTF, thanks for the recommendations on Minneapolis. From Dave. I wanted to see if you knew why there is a discrepancy between the actual indexes and their ETF future counterparts. Here is an example from this morning. You can see in the pictures of the Russell that candles 3 and 4 on the 5-minute chart look very different from the IWM. Is this normal to have slight variances? Um, and which way do they have to resolve? ETF catches up to the index, or the index drops to match the ETF. For reference, I am seeing futures chart and the ETF match up much more often than they do with the index. So it's a really interesting question, and I genuinely don't know the answer. I don't really spend a lot of time looking at the cash indices, to be honest with you. Especially to the point where I don't even actually pay for the data on the cash indices anymore. I just am specifically looking at uh, the SPY, QQQ, and IWM. I don't think that that happens very often, and I don't think it should happen at all. I mean, it's just an arbitrage opportunity, and at this point, on arbitrage opportunities, the market tends to operate so efficiently because the robots just see that and eat it up. Maybe with an index and an index ETF, they're so massive that it takes a lot of money to, you know, keep them in line for when those arbitrage opportunities could happen. And maybe that's why every once in a while you see that spread. But really, in theory, it shouldn't happen. Because if it does, again, it's the easiest arbitrage opportunity in the world. It probably would need to be done robotically and not manually, but you just buy the underperformer and short the outperformer between, I guess it's hard to buy a cash index. Maybe you could do it through options. You especially shouldn't see it in futures versus the ETF because again, you just would buy the underperformer and short the outperformer for arbitrage mean reversion. So yeah, again, Dave, directly, I don't know. Um, Eddie Vick is providing a link that maybe can help us out a little bit. Let you know if I make Taylor Swift money. Leif, on your question, um, through Lightspeed, you can trade commodity ETFs. You can trade UNG for nat gas as an example, but you can't trade futures through Lightspeed. And T3 does have futures trading. If you're interested in learning more about futures trading, email your Class B manager at T3. Let's see here. I might be wrong, but the on this, but SPX and NDX don't chart well whatsoever, since they don't trade the underlying. Yeah, that could be it also. Seemed like the index dragged the ETF up. Yeah, it shouldn't be that way. I mean, they really should trade one for one. Uh, from Bandit. How does your approach change when the market is in a slow grind up? Is that a time you use for profit taking and no new positions? Not necessarily. I'll take new positions in a slow going up in the market. Breakouts will work. Breakouts will work really well. You'll just be slow in the reward because the market tends to be grinding, or you might get a little squeeze in that stock as the breakout occurs, and then continuation. The most grindy year I ever recall trading was 2019. Yeah, 2019. That was the year when the S&P was up like 30% or so, and the biggest pullback the entire calendar year. The entire calendar year from highs to lows was like 2.5% or something like that. Compare that to 2022 where we moved 2.5% like every day. So that was like the ultimate slow grind on the upside. So I think breakouts can work pretty well in that market environment. That's also a type of environment where swing trading works really well. So, for my approach, a lot of what I do is I have these core swing positions that you guys see me in for days, weeks, months, sometimes even years at a time. But I pretty much actively trade every single position that you see me in every single day, even if I'm holding them for months at a time. So it's like I hold these swing positions and then I actively trade them for cash flow. The benefit of that approach is that if I get an environment like 2019, my day trading is not going to make me as much money. There's no volatility. But my swing positions, they're just going to keep moving in my favor slowly and steadily all the time. So in 2019, the key to that year was just to be leveraged up to the long side and hold positions overnight and trail on daily charts. And you could have just trailed on that daily chart for the entire year on a large amount of leverage and just gotten completely paid for it. Very boring, but profitable. In another year or another market period, the one that I always think of is the 2 months that we had this year where we were stuck sideways, but there was a lot of intraday volatility in April and May here, right? The zero DTE dynamic had really begun to hit the market. We were getting a lot of intraday reversals. We were getting a lot of intraday volatility, but we were getting very little close to close volatility. On that type of environment, the swing positions aren't going to pay me much at all or anything, honestly. But the intraday cash flow trading paid me great during that 2 month period of time. And then when the market eventually broke out in this period, I was able to make money in both. My swing positions then really started paying me. With the day trading was still paying me as well because the intraday volatility stayed pretty good. So yeah, I hope that helps, Bandit. You still want to pay attention to your extension rules always. I'm not sure if if your question was actually directed at like right now, like this week. This week we had one blockbuster trading session on, let's say, Thursday, on Tuesday, and the other days were very, very boring and grindy midday. So, that midday summer price action, I think, is generally something you want to avoid. I don't mind ranges because a lot of what I do is, especially when I've got these core swing positions, is selling into the pops and I'm rebuying into the pullback. So when I get a range bound market, I just do that. I'll do it all day, and I'm fine with it. It doesn't make me a ton of money, but it certainly makes me money. And that's one of the big things about trading success, right? Is you need to constantly adjust and adapt to the market environment that you're looking at. So appreciate the question, Bandit. I hope that helps. For Michael, do you think a soft jobs number tomorrow will seal the opinion that the Fed is done and might even start to panic and cut on jobs GDP weakness? I don't see the Fed panicking on a jobs number tomorrow. I don't see the Fed cutting until we see interest rates. The Fed's only going to cut if we enter into a major recession. I don't think that the Fed wants to jump the gun on cutting interest rates. I really believe them on the higher for longer. So they're only going to cut if we get a huge recession that really begins to hit, if all of a sudden we're finding ourselves into that hard landing scenario, or if inflation really is able to get to 2% or near 2%. So I do not think that we see any sort of cut. Uh, my expectation for the jobs number tomorrow is the Goldilocks number is going to be a number that's a little bit soft, but probably not like a big negative number. Um, the Goldilocks situation right now is, especially when it comes to anything jobs related, is like what we just saw with Jolts a couple days ago, right? The Jolts job opening number came down. Well, that's technically not great for the economy, right? It's not great for jobs, but that's like the number one thing that the Fed keeps talking about, that they want to see that relationship between supply and demand and the jobs market move more towards equilibrium, which would bring down the wage increases and therefore, um, you know, create steadier inflation or bring inflation back down. So that Jolts number coming in light was huge for the market. It was really perfect. So what you want to see with the jobs number, if you want the market to go up or at least go up initially, and I think that we might not get continuation on an up move tomorrow, no matter what, just because of our technicals here are getting pretty extended. Um, but you want to see the number come in a little bit light. That's probably best for the market, but not so light or so negative that we're all of a sudden imminently looking at like a hard landing recession type situation again. You don't want to see the number come in really good either, where everybody is working, because then, interest rates could continue higher, which the Fed keeps threatening at this point. I don't think it's going to happen, but that's what the Fed keeps threatening. So we'll take it as it comes tomorrow morning, but that's what I'm looking for. And even in that Goldilocks situation, if it gets these markets, the SPY and Qs to $10 plus extension, I will be looking to short into that move just technically. Appreciate the question, Mike. Pat, if you're listening, Lenkov had a question for you on some earnings reports. Cool. Looks like I got through the questions in the VTF. Let's see if there's any questions over on YouTube. My sound's a little bit muffled. Hopefully it's not too bad. Um, Again, just I'm on the road. So just have to push through as much as we can. What are my thoughts on CRM? The CRM report was excellent. Was great. Failed off that 230. We're looking at 230 as a level today in CRM. It doesn't really look like it ever really got up there. It's the high. Highs right at the open, 228.79. You had to pay down a lot if you wanted to short of 230. And I honestly didn't like the short because I thought that the earnings report was really good. Um, it was slow and grindy. Yeah, it looks slow and grindy on the downside. I didn't see anything to do in CRM when I typed it up intraday today, so I never really got involved. I like that ADMA catch up trade. You can see this thing was building on a wedge right here as the ADMA caught up on the 5 minute for the first time, and it ended with an inside five. So I would have liked, and it even triggered. So if I was watching it, I may have gotten involved in and taken a loss in CRM long on the 10-15 bar, but I wasn't watching it that time, so. You took you thought it would catch up to the market and took a couple of longs at 224. Yeah, I don't like the idea of buying this thing after this wedge breaks down. When it really starts going deeper into this equilibrium area after the momentum pattern fails, I probably would look to avoid it. I don't know what Tate and Bill are talking about, but I love the if I don't know, I at least know who to ask. It's a great line there. All right, guys. Anything else? Like I said, I do got to run a little bit early today, but we do have a little bit more time also. So if there's any other questions, I'm happy to answer them. Otherwise, I'm gonna wrap it up and pretty happy with this S earnings report here. Can you get a T-shirt from the Pro Jam show? You gotta go. You gotta go to the show to get a T-shirt, man. I'm probably gonna look at them. If there's any cool T-shirts, I'm gonna buy myself one for sure. I'm pumped for the show. I got tickets for tonight and I got tickets for Saturday night. I'm going to both shows. You're going to be a poser. You're not being a poser for me. You think the earning on MDB? I didn't look at it. It's out after hours. I was so focused on this S. Broadcom, 701. Do we even get it posted in the VTF? I don't even see it posted in the VTF. See 701. I see Broadcom. I don't even see MDB in here, so I got no information for you on it. No opinion, no information. Stock trading up though. That's all I got for you, which you probably didn't need me to tell you that. Oh, thanks, Linkoff. Revenue, it's a nice beat. Guide there, it's pretty good. Awesome. Let's look at the chart in conjunction with that. Is actually not the $400 area. This 400 to 420 looks like a big price congestion zone. So I don't love trading it in that area, but yeah, it looks decent. Thank you for posting those numbers, Bill. All right, gang, I'm gonna wrap it up then. Have a great night, everybody. Wish I could say I would catch up on some sleep tonight, but that's not happening. I'll see you all tomorrow.